Good morning, good afternoon, and good evening, everyone, depending on when and where it is that you're watching in this from. Okay, so welcome to today's segment of market breakdown. Today we're going to be looking into Euro USD. Yeah, Euro USD. So we've got a lot of juicy setup that is lined up on Euro USD for that is coming up. So we're going to be looking at it and breaking it down from the higher time frame, and then we're going to position ourselves down for to be able to catch the move when it starts happening. So you guys know the way I trade. Standard procedure: I come to monthly time frame and break things down from there, and then I proceed to weekly time frame. I go down to weekly time frame, go down to daily time frame, and then down to 4 hour time frame, which is where we're going to be picking our entries. So without taking much time, because I won't like this video to be too long, I'll just be removing some of my tools and then making my charts to be clean. You guys know I pride myself in having clean charts. So I'm going to be making my charts to be very clean, and then I'm going to be proceeding to I'm going to be proceeding to the next um phase, the next thing on the chart. Okay guys, sorry about that. Okay, so with my tools being removed, I'm just going to bring this arrow out and then draw out things so that you guys can be able to see very well what it is that I'm trying to explain for you guys. Okay, so right here we have a chart formation on the monthly time frame. We have a chart pattern forming on the monthly time frame, which is known as a double top. And then if you've been following me for a while now, you're going to notice that I trade usually based off patterns. The patterns it is that the markets are trying to give me are what I interpret, and then I trace based on these things. So majorly price action is what I trade, and then I trace it from the higher time frame down, scale down to the lower time frame, scale down to the lower time frame until I get to where it is that I'm going to be picking my entries from. So basically, I've said that before. I've said that already, but so that in case you didn't get it, that's why I just said to repeat myself. So with that being said, like I said earlier, we have a double top here, and then if you look down, you see that the market has actually broken through the neckline to the downside, formed another zone, and then pushed back to the neckline region. So after reaching the neckline region, we saw something that was looking like if you we saw something that was looking like a pin bar, this candlestick pattern, this green candlestick pattern here, which was followed by a bearish candlestick, and then another, no, now a pin bar followed by a bearish candlestick at this region, which was an area of value, signifying to us that this market is about to reverse back to the downside from here. And then if you're one of the guys who are in my free Telegram community, and then you followed the breakdown before I started posting on my YouTube channel, you have been able to like understand better how it is that we're able to get into the trade that we banked from here to here. I think we're able to get close to like 450 pip here. So it's close to like 450 pip that we're able to bank from this neckline to this major zone. So now again, there's another opportunity that is beginning to present itself, like I said earlier. So now we have a double top, we have a push back into the neckline. That's a retest of the neckline, and then now the neckline is beginning to push the market back to the downside, which means this double top is beginning to hold very strongly. Which means this double top is beginning to hold very strongly. So we have we have double top. That is number one indication to the downside. Number two indication to the downside, the neckline is pushing it down. Number three, the we have somewhat of a candlestick pattern here. Number four is now if you bring out your Fibonacci from swing and then you draw it from swing high to swing low, from swing high to swing low, you're going to see that the market came into the Fibonacci, sorry, the this thing, the the tools on my screen are getting too much. Okay, let me remove this trend line. Oh, we've been able to see clearly that the market is in a downtrend. So now you're going to see that I don't like my chart being rough, especially when it is I'm teaching. Okay, so you're going to see that the market came into it again. The market was able to the market broke out of um above the what's it called above the neckline, but then it was coming to fulfill a technical level, which was this area of value right here, this zero point 0.5 and 0.618 Fibonacci level. So the market came here, fulfilled this technical level, and then started moving back down. So now this Fibonacci is pushing it down. We have the neckline pushing it down. We have a double top pushing it down, and then we have a candlestick pattern pushing it down on the monthly time frame, which means this move is looking very very solid on the monthly time frame, which means it's looking very solid. Now let's proceed and then go to weekly time frame and see what it is that the market is trying to the rest of the options that the market is trying to give us. Okay, so now I've brought back my tools. So let's go to weekly time frame. Okay, so on the weekly time frame, what we can see here is that the market actually came here. You can see that the market came here on the weekly time frame. The market rallied up from the major zone that it formed when it broke through the neckline to the downside. The market rallied up to this very point, but then when the market rallied to this very point, then it started doing somewhat of like the move from here to here was very very linear, but then it started consolidating, giving us somewhat of a proper higher high, higher low, higher high. It's not looking too much of a higher high. It's looking like an equal high. Then came back to form a higher low. Then formed a higher high. Now this higher high is even looking like a fake out. But then if you draw this trend line from here, extend this trend line, you're going to see that it's looking like a rising wedge. And then a rising wedge in after an uptrend is signifying a move to the downside. Now the market has came broke down below the rise this trend line, but the market won't just continue moving in a straight line. The market doesn't just move like that. Yeah, you might look at this and be like, the market moved in a straight line. Why? And then why am I now saying the market doesn't move in a straight line? The market moved in a straight line here because the market was trying to form a chart pattern, and then the chart pattern has been formed. Now after the chart pattern has been formed, there's a high chance that the market is going to consolidate, start giving a sequence of lower lows, lower highs, if the market wants to start continuing, if the market wants to continue moving back in a downward momentum. So now we've been able to see that, and also the move from here to here, the move from this very point to this point, that's to the touch of this major zone, which is holding the market from going down below here, you're going to see that the move is also linear. So there's a high chance that the market is going to pull back into either this this resistance and then fall, or the market is going to pull back into this very into this point and then start selling to the downside. But then there's a high chance it's going to move into this place. Why? Now let's bring out our Fibonacci so that we can be able to see that it's going to be matching with the area of value at that point. Okay, so like I said, if you draw a Fibonacci from swing low, from swing high to swing low, you're going to see that it's matching with this thing. I'm coming. Let me remove some of the tools. I don't like things being rough on my charts. I like them being coming. Okay. Okay, so you're going to see that the move from here to here extends, and then the market is beginning to like stall around this area. Now the market is beginning to stall because there's a high chance that this major zone is likely to hold the market to pull back here before the move will now continue going down below. So in order for us to be able to profit from this market, okay, I'm coming. Let me remove this Fibonacci back and bring back the rest of the tools. So now we have it like this. Oh God, God. I don't want I don't want my chart being clustered or should I say off. Uh, so now we have a breakdown below here. We have this major zone holding the market very strongly, and then there's a high chance of the market coming into here as it is the 50 pip region. Now, there's a high chance of the market coming into this place. Whenever it is that the market comes into this place, there's a high chance it's going to give us a flag pattern or something to or an avenue for us to be able to draw a counter trend line. So now, whenever it is that we've been able to draw a counter trend line, and then we now get a break below it at this region, that is a confirmation for us to now start selling. Now, I'm explaining this on the weekly time frame, but we're not going to be selling on the weekly time frame. This is just to illustrate what it is that we're going to be looking out for whenever it is that we go to the 4 hour time frame. Now, we've been able to see clearly that there's also a chart pattern that is indicating a fall to the downside even on the weekly time frame. That is a sixth reason, or is it a fifth or sixth reason, which now you can be able to see that the reasons why we should sell this pair is beginning to line up. Reason why we should sell this pair is beginning to line up, and these reasons are coming from a higher time frame, which is making it even more solid, and that is something you can very well rely on. So now let's proceed to this thing. Let's proceed to okay. I want to explain something for you guys. Yeah. Now, instead of jumping, there's this thing that happens to we traders. Yeah, whenever it is that we're always anxious, and we don't want to miss a move that the market is going to give. So because of that, whenever it is that we've seen a move running or moving in our direction, but we're unable to get in, we tend to just jump in without waiting for a good entry criteria. Now, because of that, you should have a proper plan that is going to help you trade better whenever it is that, even though the trade is beginning to go in your favor, you should leave it and let it go even though you're unable to enter it, because there's a high chance that you might get into that trade, then it comes back to stop you out. Maybe the trade is just going to do a stop loss run. Let's say, for instance, you want to enter a trade here, and then you're unable to get an entry criteria, but just one candle shows up and that candle is beginning to go your area. What you should do is let the market go in your area, like let it go in your favor, even though you're unable to trade it, because there's a high chance what the market is just trying to do is go in your direction on that single candle and then come back, maybe with the next, or with the next couple of candles, come back, and then whenever it is that it even comes back to your entry point, it's now going to go against you. Sometimes it happens in that way. So whenever it is that you see that kind of a thing happen, you should wait for a good confirmation to happen before before you now jump into a trade. So now I've been able to see this. If I see something like this, now my plan for this trade is to wait for a pullback into here, and then I'll start selling around this region when I've been able to draw a counter trend line and then it breaks it. That's going to be my entry criteria. But if I see the market continue going this way, I'm not going to start jumping into the market and be like, hey, because now, let's take for instance, if I want to enter this market now, and then I enter this market now, although I'm going to be entering on the lower time frame, but then my stop loss won't be something that is well planned, and then because it's not well planned, because everything about the trade now is scattered. Even if I profit from the trade, if I continue with that in the long run, I'm going to lose more than I'm going to win. And then if I'm losing more than I'm winning in the forex market, there's a high chance that I'm not going to be making money. there's a 70% or let me say 80% chance I'm not going to be making money. Yeah, you can be like risk to reward is there and this and that and that. But then if you have a good win rate, it's going to motivate you every time to want to like place whichever trade it is that you're getting in the market. And then if you're placing it, you're making money, you're placing those trades, you're making money. It's going to like automatically you're going to become a winner in the long run. In the long run, you're going to become a winner, and that is what actually matters. Now, with that being said, they pull back here, break out, and then break out of the pull back. That's break out of the counter trend line. Then I'll sell. That's probably going to be on the daily or on the 4 hour time frame. Or if the market wants to continue selling from here, the market can decide to do its thing. Now, there's a high chance it's going to pull back here, but then the market can decide to do its thing. The market can just range within this period and then fall here. Now, if the market starts to fall, I'm not going to be interested until this very support right here, this minor zone right here, holds the market and then push the market into this major zone. Then, if I'm able to draw a counter trend line, something that looks like this, if I'm able to draw it, it's until I now see it break below that counter trend line on the daily time frame. That is when I'm going to be placing a sell. A stop loss will be above the previous high, and then first level target is going to be here, this minor zone. Then overall target is going to be here. Now you're going to now I'm going to be waiting for a very long time before this starts to happen. But then check the plus side is that if you calculate the pip count from here to here, it's going to be around 7, 8. I think it's even more than that. It should be around 8,000 pip. Now, if you're going to be taking 1,000 pip from the market, and then you're like, if you're going to be taking 1,000 pip from the market by just doing nothing after placing the trade, just relaxing, and then maybe focusing on the rest of your business that you have and stuff like that, I think that is what it to me. So, a pullback here, sell, pull back here, sell, pull back here after a break of it again, then sell. That is, you're going to be having like, let's say, three positions to this very point, and then you're going to be holding the market for its dear life. No, now let's continue uh to the daily time frame and see what exactly is happening. Okay. I can see something building up on the daily time frame. I can see something building up on the daily time frame. Let me remove. Okay, I've removed it already. So now, if you draw this, it's looking like the market is beginning to flag. It's looking like the market is beginning to flag. Now, if you draw this as well, it's looking like the market is beginning to flag here. Okay. Now, it's looking like the market is beginning to flag. So now we're beginning to have uh what's it called? Higher high, higher low, higher high, higher low. Now I'm expecting something like this. I'm expecting this to be happening. And also another thing is if you come here and then you draw, there's a trend line that has been holding the market to the downside. If you draw it, also there's a trend line that has been holding the market to the downside. If you draw it very well, you're going to see that the market has come. You're going to notice that the market has come, broke it, we tested it, and now it's not. Now you see. Now the market has come, broke it to the upside, they tested it, and then it looks like it's beginning to move to the upside. Now, if the market is continuing this upward momentum, this can just become a range automatically. But then, if the market continues in this upward momentum and starts to flag within this, continue with its flag, and then comes to touch it, it's when the market now broke below this counter trend line, this very black bar that's holding the market to the upside. This one, it's when the market now breaks below it on the 4 hour time frame. If I say 4 hour time frame, 4 hour candle close below this one, I'll be placing a sell. Stop loss above the previous high, whichever place it is that it forms. Then should be around this area or whichever place it is. First level targets at this green bar when it start coming down. Overall target will be here. Then I'll wait again. That is, I'll be closing the whole position it is I'm going to be opening from around here. Then that's I should be getting like 1:4 or 1:5 around this trade. That and again, I'll know that yes, I've been able to bank this. Then the next thing I'll do, wait again for a break below this major zone, a pullback again. I'll draw the same type of counter trend line that I'm going to draw, a break below it on the 4 hour time frame. Then I'll be placing the sell and then like that, like that, like that. So that's basically it for Euro USD chart breakdown. So if you have any question concerning this, you can just drop it in the comment section and then I'll do well to attend to it. And also if there's any pair it is that you'd like me to look into, you can just make a suggestion of it and then I'll look into it as well. Kindly do well to subscribe. Drop me comment in the in the comment box. Uh, drop a like to the video. Please do well to subscribe. Do well to subscribe. Thank you guys. Cheers. See you. Next episode is going to come out.